What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are looking at the silver shortage and how it is continuing to develop, and we are nearing, potentially within the next couple of days, but even more likely within the next couple of weeks, we're nearing closer and closer to a point at which there will not be enough silver to support the inflows into ETFs. Obviously, it depends on the sustained demand for silver, but as long as we have even just a couple of days of sustained buying and liquidity needs as we've had over the past couple of weeks, it's possible that within just a couple of days, the silver supply runs out. So today we're going to look at number one, who has the silver? Number two, where is the available silver sitting right now? And number three, what does the current situation look like for how much demand there is for silver versus what is currently available? Ready? Let's dive in. So at this point, I want to preface this video with a few points. Number one, doesn't seem to be any evidence of fraud from the major ETFs, at least not yet. I know we've seen reports about, hey, there have been this many purchases and, that's not actually possible. But with the way that these ETFs have designed their structures with their prospectus on how they allocate silver to themselves and where they're able to store it and how they purchase it, at least not yet, it doesn't look like there needs to be any fraud for them to be able to say that they have what they say they have according to their own rules. Now, SLV and PSLV and some of the other ETFs out there all have different rules on inside their prospectus on what kind of silver they can hold and where it has to be held and whether it has to be allocated or unallocated and what size of bars it has to be. But that doesn't mean we're not getting close to the point where there may not be enough silver left. So today we're going to dive into an article, a report put together by Ronan Manley on bullionstar.com. Fantastic article. We're going to look at some of the numbers that he shows. Fantastic research. It was just updated yesterday on Monday. So we're going to look at some of these because we are basically getting close to fully running out of silver. And we are looking at the LBMA vaults here, and that is where most of the silver storage and liquidity needs come from. Silver goes in and out of there, and they do a lot of storage for customers like ETFs. And so we're looking at the liquidity available in the LBMA, and then at the end of the video we're going to look at Comex as well. The bottom line here is that 85% of the silver held in LBMA vaults is already accounted for, already owned by ETFs. Now, the LBMA bank vaults, they are run by 7 different operators. Some of these are bullion banks, some of these are security firms, including JP Morgan, HSBC, Brinks, and others. There are a total of 14 different silver ETFs out there that store their silver in the LBMA vaults, and obviously the biggest one of these, the biggest whale here, is going to be SLV. Now, if you take a look at this chart, we can clearly see here a breakdown of the ETF and how much silver they have and whose vaults they are currently using. So you can see SLV using JP Morgan, Brinks, Malka, and Loomis, and clearly that's the largest one here, over 20,000 tons of silver for SLV. And altogether, when you add them all up, including at the bottom, you'll notice Bullion Vault and Gold Money, these are other transparent holders of silver that are using LBMA vaults. These are not ETFs, but they are services that store gold and silver. So altogether, you can see here that there is almost 29 tons of silver being stored in LBMA vaults by these companies, by these funds. That leaves just 15% of all silver held in LBMA vaults available for anything other than what these ETFs and these 2 transparent holders have already allocated to themselves. Now, 15%, that is just under 5,000 tons, about 4,900 tons of silver, physical silver available. Now, this number obviously is dynamic. As purchases and sales roll in and out and as deliveries roll in and out of these vaults, obviously that number is going to fluctuate. You can see here that on February 3rd, that number of, that percentage of silver that ETFs held as a total of all LBMA silver was all the way up to 87%. Now, the story doesn't end there, which is something you're going to hear at least a couple of more times throughout the rest of this video. There are 2 different categories of bullion stocks inside these vaults. There's reported, and then there's unreported. Reported stocks are what we were just looking at. It's all the exchange-traded products like ETFs and some other things. And then there's the unreported stocks, which consists mainly of government and custodian vaulted stocks. Now, it's important to note here where the LBMA gets its silver supplies from, and one of the main sources sources of supply that they source for getting silver is during times of low silver investment demand, mainly due to refiners offloading their metal to the vaults. This is important to note here because in times like right now, there is no excess supply that refiners are offloading into the vaults here. In fact, it's really the opposite. In times of high demand for silver, a high investment demand for silver, there is no liquidity being replenished into the vaults. There's no new silver supply coming in. Whether you're looking at retail, whether you're looking at wholesale, whether you're looking at refiners, whether you're looking at mints, everybody's trying to get their hands on silver right now. And the story doesn't end there. There's another category in the unreported silver holdings in these vaults that belongs to basically high net worth individuals, family offices, investment portfolios. Now, according to estimations, this could be anywhere between 30 million and 50 million ounces. Now, on the conservative side, we can say that at the very most, this probably leaves only about 4,000 tons of liquidity in the LBMA vaults for silver that's not already allocated to somebody. Just to put that into perspective, 4,000 tons of available liquid silver in the vaults. SLV from January 29th to February 2nd actually added about 3,500 tons just to its own holdings. So now you can clearly see here there's really not that much liquidity in these vaults. And that's why I said at the beginning, if we have just a couple more days over the next few weeks like we had over the turn of the month, like the 29th, the 1st, the 2nd, if we have a couple more days like that over the next couple of months, we could very easily see the actual total supply of silver gone. Now this is a problem because that means that all of these ETFs out there wouldn't have the ability to secure any silver. Now obviously this assumes that there's no new supply coming in onto the market, but that's a relatively safe assumption given the heightened demand for silver right now and the increased awareness that there might be an extreme shortage about to hit. But the story doesn't even end there. If we look at what the LBMA says about its silver holdings, you can clearly see that they include all physical forms of metal. That's coins, that's different sized bars. It's all of the metal that they include. The problem is that most of these ETFs, especially SLV, are limited only to purchasing 1,000 ounce good delivery bars. This means of that extra 4,000 tons, that is probably how much the LBMA vaults have available to allocate to somebody who doesn't already have a claim on them. That means that a lot of that, potentially a good amount of that, potentially a substantial amount of that, might not even be able to be allocated to some of these ETFs because they're not good delivery bars, they're coins and the wrong size of bars. Now, when something like this happens with gold, the one fallback that these bullion banks and trading desks use in order to secure gold is by borrowing it or leasing it from central banks. We know gold is the money of kings, and central banks all around the world hold a lot of gold, increasingly so over the last 10 years or so. And so there's a lot of gold leasing that happens. But that option is not available with silver because, quite frankly, silver is not the money of kings. Central banks don't own silver. They only own gold and other currencies, obviously. So these bullion banks don't have central banks in order to rely on to go secure leases on central bank owned silver. It's not an option. And the story doesn't even end there. Throughout this entire discussion, we haven't even mentioned unallocated silver. Unallocated silver is basically silver that exists in paper form only. It's a paper claim on gold. It's a contract that says, hey, I owe you silver. I'm not holding an actual physical bar of silver that I could give to you that you actually own legally. Instead, it's a piece of paper that says, if I want, you as the owner of this unallocated silver, if you want at any time, you can say, hey, give me silver. And then me as the contract holder, what I would have to do is go out to the marketplace and find and source that silver to deliver it to you. And there's a substantial amount of silver ownership out there that is actually ownership through unallocated contracts. And the story doesn't end there because obviously LBMA is not the only player in this. The other major player is going to be Comex. And it seems to be that there's a lot of liquidity for silver with Comex, but not if you dig into the details a little bit. Now, I really appreciate this research that Ronan Manley put together for this. He shows here that SLV's bar list is 10,000 pages long. Now, leafing through this data, he found that number one, SLV only holds the 1,000 ounce good delivery bars. And number two, 3,200 tons of that silver is held in the JP Morgan New York vault, and that number has not changed since January 29th. And so all the additional silver they're allocating or they're locating in other vaults from other sources. Why is this important? Well, if you look at the Comex data, it shows that as of February 5th, the Comex silver inventory shows the JP Morgan New York silver vault with 4,700 tons of silver. Now we know that 3,200 of those tons already belong to SLV. That means that despite the Comex report showing 4,700 tons of available silver in the JP Morgan vault, there's really about 1,500 tons, far less than the total amount. You have to exclude the amount that is already owned by SLV. Now, what I expect to happen over the next couple of days, it looks like we might have hit another little top here in silver. We'll probably get the price hammered down by shorts again on silver to try and discourage investor sentiment, discourage a bullish sentiment on silver. Maybe we hit new lows, one more time here on silver to try and end this thing before it blows up and it turns into a disaster for these bullion banks and precious metals desks. But the fact of the matter remains that as the price gets hammered down, it actually makes it easier for investors to put more money and request delivery on more ounces of silver. And I know that everybody out there is talking about the impossibility of buying silver. It's still possible. Obviously, the choices are very limited, and some places have increased their premiums. Some places have increased the minimum amounts that you have to purchase, and some places are on back order where the delivery is now a week out instead of immediate like it used to be. But it's very possible that as the price gets hammered down, that opens up a greater and easier opportunity for some deep pockets to come in and say, I was going to buy all this silver anyway, now I can buy more with the same amount of money, and that's going to probably make the problem even worse, and we're probably about 1 to 2 weeks away from seeing the supply just run out and having a big bull run in silver. If you're going to try and get your hands on some silver or gold for that matter ahead of this run, make sure that if you can, get it physically, and if you can't, if you have to store it somewhere, make sure that the storage is allocated, it's segregated, and preferably in a country that has a little bit higher degree of economic freedom, preferably private vaults. I really like the service OneGold. You can sign up with my link in the description below to get $5 when you sign up for your account. And lastly, if you haven't already, I've launched memberships here through YouTube, and we are going to be doing a live stream once every month, a live stream Q&A, just a small group, so it's going to be very conversational. We're going to have a good time. The first live stream Q&A that we're going to be doing is next Wednesday, the 17th. And so if you haven't already, right below the video, there's a join button next to the subscribe button. If you don't see the button, you can go in the description of the video and find the link to join there as well. Like I said, small group. We're just going to be doing a live stream Q&A once a month, and it's going to be fun. We're going to have some great conversations, talk about whatever's going on in the market, talk about portfolio allocation, talk about trading, talking about investing. So sign up there before our first live stream next Wednesday. As always, I really appreciate you guys. Thanks so much for watching. Have a good day.